Hey guys, my name is Toby Mathis, and today we're going to be talking about international conflicts and what the effect is on the stock market. And should you be afraid? Before we jump into that, I just want to let you know that we teach a class every month called Infinity Investing Workshop. It's absolutely free, and you're more invited to come. Just click on the link below. But today we really want to get into this topic that's, unless you're living under a rock, you're seeing there's conflicts throughout the world. And what is the practical impact? And so it usually helps to look back at history to see what's the result of big wars. Like, we had two world wars in the last century, and what was the impact on the markets? And we had lots of little wars. I say little, they were big wars: Korean War, Vietnam War. You had World War One, World War Two. You had assassination of presidents. You had attacks on the trade centers. You had all these things going on. What was the impact on the market? And I'll say this, that generally speaking, you're going to see a downturn in the market until there's certainty as to what the conflict's all about. And then the market 100% of the time bounces back. 100% of the time. And I just say that so that it give you some solace that if you are a long-term investor, these types of situations should not impact you. Except maybe things are on sale when there's a pushback. So you always look and see what companies that you're interested in buying, which companies are great companies and have been consistently good performers. And then if you do see a dispute or something going on in the world that causes a pushback, causes a pullback of that company, that's a buying opportunity. So there was an old adage, and I forget which article I read it out of, but it was during the Cuban Missile Crisis. And the traders on Wall Street were like, oh my gosh, what do we do? And they said, you buy missiles when they're in the air. You buy the companies, you buy your stocks when there's the pending issue, and then the stock market tends to rise when that issue becomes solidified. So in the Cuban Missile Crisis, thank God it didn't turn into anything more where there's armed, just, we didn't end up with a war, obviously. But you still had that period of time when it was causing fluctuation, causing the market to pull back. And that's typically what occurs. Like if you look at some of the major wars, you'll see a pullback until there's actually war. And then when there's an actual war, then you'll see the market come back. So I'm not saying that wars are a good thing. Please don't interpret that. What you see is a pullback on the speculation and the fear, and then you see, once there's solidity, then you see the market's usually correct. And I could just say usually 100% of the time they've corrected in the past. There's no reason to believe that they won't correct in the future. So if you are somebody who is afraid of what's going on, I would just say don't be afraid for the long-term projections of the stock market. It's going to be okay. If you are somebody who's living off of your stocks, now unfortunately, there's still people that are taught this 4% rule, drawdown rule, where they're actually drawing down their principal. That is not what I teach, by the way. Myself and my group, we are big believers in buying assets that produce cash. We really don't care about the value of the account. We care about what the account is creating in terms of income through dividends, through the use of renting your stock out. We like to see that revenue be what you live off of, and you're not selling the underlying securities. That's why we call it infinity investing. We're holding these things forever. We do not have a plan to sell anything. So we're accumulating so that we can have the revenue stream that's generated, and that revenue stream tends to grow much faster than inflation. So it's actually a really good type of investment. Historically, that's absolutely true, and we believe it's going to continue. So we look at history to give us a lesson, and there's not a single situation where there wasn't a large dispute where we didn't see a bounce back, and we also are in a great position if we're living off of the income stream off of an asset that we don't have to sell the asset. But if you are in that situation where you're going to have to sell an asset, then I'm going to say you might want to be more cautious, because we can't predict what's going to happen in the short term. What we know in the long term is that no matter what the dispute is, it sometimes takes as long as 300 days, but the average is about 60 days for the market to recover on a pullback. So you have an armed dispute, or you have something going on, or a full-on war. The longest period of time that I saw was in the 300-day range for it to recover. That's to get back to the point where it was, right? But generally speaking, it's a fifth of that time. It's about 30 to 60 days. And I don't have any reason to believe that this will be different. This isn't, nearly to the level of some crises that we're seeing. Hopefully, it doesn't continue to grow around the globe. But just, you're going to see this pullback, and then you're going to see a bounce back, right? And all I am saying is that if you are somebody who lives off of like, if, hey, I'm having to sell my securities, and you're already in deep, I'm not looking for you to sell a bunch of stuff. You're going to try to maintain as much as you can. If there's other means to pay for expenses, for example, and you're in a pullback, this is the wrong time to be selling. And that's just my experience. I'm just a tax attorney. I'm not a financial advisor. I'm not sitting here telling you what stocks and things like that to buy. But what I can say is that I have 10,000 clients a year that file returns, and we can see which ones make money consistently. And the ones that make money consistently and have grown the most wealth are the ones that don't sell when things are going bad, and frankly, don't sell. They're the ones that accumulate asset bases that are continuing to generate cash flow, and then they perpetuate themselves. It's kind of like a snowball. It's just getting bigger and bigger and bigger. If you have to eat the snow, if you're living off that snowball, then you're pulling pieces out of that snowball. Then it can, and you have to make a big chunk out of it, especially if that snowball has been partially melted and you need, this much snow. It's going to take a big chunk out of that snowball. I don't want you to be in that situation. Don't want you to be in that situation. So let me review just so it's not confusing. Number one, we're going to recover. Number two, historically, when there are disputes, international disputes, whether it be armed or otherwise, you see a pullback in the market when there's uncertainty, and then you see it grow when there's certainty, even if it's war. Even if it's war, we can look in the past and we can see exactly that this pattern tends to repeat itself, pull back, then push up, and it always ends up gaining. If you look at the S&P, like it's 100%. No reason to believe this is going to be any different. You have a lot of other factors. You got inflation going on, which is probably going to get worse. You have the Fed threatening to raise interest rates to combat it. God knows what's going to happen if depending on what's going on in the world, as to whether there's going to be more or less interest rate hikes or whether they're going to delay it. But historically, if you're able to weather this storm and hold on, you're going to be fine. And if you're a buyer, everything's on sale. You're going to see some great opportunities to acquire companies that may have been run up in the past, and now you're getting an opportunity to acquire them at a little bit of a discount, which could actually be really, really good. All right, guys, if you like this type of information, if you know anybody that needs to have their nerves quelled, please share this with them. Click on that subscribe button and click on that like if you can. It does wonders for the visibility of our videos and also allows us to know which things you like and which things you don't like so that we can continue to make more of the content that you like. Thanks, guys.